Hello, Patreon. How is it going? Welcome back. This is a very special Patreon. We're gonna go in depth here because there's a lot of things here. We got Eric Lambert to this side of me. We got Chris Sauber. This is like Hollywood Squares. Chris Sauber down here. Joey Finro, brand new dad down here.
Uh-oh.
So Joey's real estate. Chris Sauber is clinical research business and budgets. And then Eric Lambert is branding and clinical research. And then all of us, we text each other all the time about stocks. So we're going to talk about all this stuff integrate. It's going to be like chaos, but I love it. I love this kind of chaos. So, first of all, welcome, guys. How's it going?
Going
Well,
great. It's good to be
welcome.
on here.
Congrats to Joey for being a new dad with the father of a 16-day-old. So congratulations.
14-year-old, yes.
Are you
A
getting
14 day
sleep?
14
Are
day
you
plus
are
2 days.
you alert, Joey? Are you able to communicate?
I've had a couple hours of sleep, so I think so.
Don't be buying stocks with less than 8 hours of sleep, man.
With not too much research. Yeah.
So, Eric, let's talk first about you because
Sure.
you're how-to clinical research. That's like your
hmm
brand on Instagram.
Yeah. hmm
Obviously, you talk a lot about stocks. We want to talk about stocks, but I want to talk to you first, man. Like, first of all, for somebody who works for like a small cap biotech or maybe a big cap biotech, I can't remember, but
hmm
uh,
Yeah. It's about mid-size. It's a
okay,
mid-size
so
company.
for like somebody who works for a drug company, basically,
hmm
most people, I would say 90% of people in your situation, that's like their goal. So they're just gonna go to work and then they can't wait to retire and then that's it. Like they're
Right.
gonna have a
Right.
comfortable life. You know, you're always gonna be in demand, even if your company goes out of business. You're gonna have another one. Why not just settle for that? Why do how-to clinical research? Why
Yeah.
start like with your own site consulting services, Lombard Industries? Why do all this stuff? Like, why come on my Patreon? You don't have to. I mean, I know we like to talk stocks, but why
Yeah.
do
Yeah.
all this stuff? You're comfortable.
Yeah. I mean, for me, for every single person, you have to do what makes you happy, right? And for me, just personally, I'm not happy unless I'm doing something productive all the time, right? So, if I'm always working on something that's going to get me to a next higher step, I'm going to do it, right? And for me, I play off of my strengths. I play off of, things that I know well, but also things that I've taught myself a lot on. So, for instance, real estate has always been a love of mine. Business in general has always been a love of mine, and uh, in school when I wanted to get into I originally wanted to be a doctor, so I wanted to go shadow physicians, but you know every time I'm kind of going into these different ventures of mine, I'm always keeping just an open mind because I you never know what opportunities are going to come about. And when things present themselves, I try to take advantage of them, right? I want to um, use those moments of opportunity to the fullest that I can, and kind of throw in some creativity as time goes on. So when I see that, when I'm looking for a job and I see that I'm having difficulty finding a job and I'm having difficulty presenting the right information to the recruiters and doing poorly on the interviews, I self-analyze and I figure kind of what's going on. But I also look at that and I say, well, I can't be the only one, right? So that kind of leads into different ideas that I get, and one of them is the social media, where I want to just educate people that might be running into the same problems with getting jobs, with developing their career, and those personal ambitions of mine are obviously playing off of that too, because I obviously want to do more for myself. So working at a biotech company, I view that as really it's really a tool to better myself and other ventures that I already planned on doing, right? So the one hole in my game for research was I hadn't worked on the sponsor level, so I wanted to be sure that I got that experience so I can better do things better in my business ventures, so I can be more knowledgeable, more well-rounded. And then when I think of retirement, or I think of how am I going to build multiple streams of revenue or create different diversifications in my portfolio, I have to think of other ways to kind of build upon uh, my revenue streams, right? So then I'll think about for YouTube, I can implement like Amazon links, and then for my personal income through my main job, I can use that to fund my business venture with Lone Bear Industries, and then from there, I can take that money and use it for other ventures and so forth, right? So one of those things is buying properties. So Joey, helps me out with that. We buy properties that are profitable, that make instant equity, that are going to produce rental income
Yeah.
in the
Speaking of
future.
which,
Yeah.
I got one of my Patreons gave me a tip. Chris, Joey, I was actually gonna tell you guys yesterday, but I was busy. And Eric, let's all go in on it, man. Um, one of my Patreon members is in Pittsburgh, and she said a lot of biotech companies are moving to Pittsburgh, and she gave me the up and coming parts of Pittsburgh. I have it written down, 2 places, and you can get homes for like 200K there right now. So if you guys want to go
Wow.
in 4 ways on a 200K in Pittsburgh, I'm down because I'm interested in investing outside of California at this point.
Yeah.
I do want to invest outside of California for sure.
Let's go
So
Pittsburgh, man.
my next property will definitely not be in California for sure.
Chris, what do you think of Pittsburgh?
Let's
Yeah,
do it.
I never looked at Pittsburgh, so yeah,
Me
tell me
either.
about it.
Me either. Thank you to shout out to the Patreon member. I don't know if she wants her name out there, but thank you. Yesterday she gave me the hot tip. So basically, but why did you want to start your brand though? Like
Yeah, it's all part of
because not
building
it's
multiple
not
streams of
normal.
revenue.
Like most people, most people will say, "Well, that's not normal. I don't want to put myself out there like that." Why?
Yeah, so I think it has to do with personality. I mean, for me, those things don't bother me to put myself out there. Um, for me, I like teaching, and I like talking about things that interest me, right? So it's really more like an outlet to put my information out there, right? It's more of an outlet for me to tell more people things, because when I'm just hanging out with my friends and stuff, I mean, I'll be talking about the same things anyways.
Yeah.
I'll talk about the homes and then stocks and things like that. So it's just another outlet for me to just say more to more people. So
That's cool.
but
I
it
get
helps
it.
me build a multiple stream of revenue, and it's just another way to kind of feed my ambitions. That's all it is.
So what advice you have to, let's say there's a Patreon, and then I know you guys want to get into real estate and stocks. So we're gonna get there, guys. I know, just wait a little bit.
Let me at it.
We're making our way. We're making our way.
But Eric, let's say somebody's
Yeah.
watching, I don't know, maybe in Pittsburgh, and
Mhm.
they're saying, "Hey, I don't know. I mean, I understand I need to put myself out there, but I'm afraid. I don't know. Like everybody has an angle, right? It may for you was stocks and then a little bit of the business side with the sites. For somebody else, it might be, I don't know, real estate in Pittsburgh, or it might be something else, but everybody has an angle where they can build their brand and merge their professional career. So here's a good example. One of my Patreon members is a major in nutrition. She's got like a
Mhm.
bachelor's in nutrition. She knows a lot about nutrition, but she wants
Mhm.
to be a clinical researcher as well. So I told her, well, nutrition, it's all about epigenetics now. Like they're learning about CRISPR and all this, but they're going to learn about epigenetics, which is how your genes express themselves. It's not enough to have the gene. If you're eating the wrong foods or you're in the wrong environment, you can have the gene, but it's not going to express itself, right? So your background in nutrition is actually like merging with where research is headed, and not to mention the microbiome and things like that. So
Mhm.
it's not that you have a bad background. She kept thinking like her background's not relevant to research. It actually is. If you look at like where like, and no matter what your background, you probably have something there that you can latch onto to help you in your clinical research career or your business. And it's just interesting because for you it was business. For me, it's very similar. For Chris, it's very similar. And for
Mhm.
Joey, who's not in research, but if Joey were to get in research, his angle would be real estate. Like all business is real estate at the end of the day. Like that's an easy
Mhm.
one to
Mhm.
get into. So what advice do you have just to get people over that edge? We're trying to motivate people here. We're trying to Grant
Yeah.
Cardone
Yeah.
10x people.
Yeah. It's all about 10x. Um, so when you have any profession, any background, like I mentioned, it's moments of opportunity, it's windows of opportunity that you're looking for, and it's ways that you can be creative with how you're going to apply yourself and present yourself, right? So in the case of nutrition, I mean, there's so many ways that you can use that. For one, if you want to just kind of be that additional asset to the company that you've created or the company that you work for that's in clinical research, you know, being able to provide services to those patients beyond just clinical trials. So if you have diabetic patients coming in, or heart failure patients coming in, et cetera, you can not only have them in clinical trials, but also advise them on different health diets that they can be on, right? So that's just one example of something you might be able to offer a company that's beyond what the typical role would be. And you know, the motivation from that is really coming from how far do you want to progress and where do you want to go in your career, right? So that's just one example of how you can stand out, I think, in that profession and how that could relate to clinical research. But it's also more about how you are presenting yourself and the creativity that you have to come up with those ideas.
Yeah, and it could be anything. I mean, there's some people in here that do meditation. There's like whatever it is, you're
Yeah,
unique in
I
the
mean,
sense that you bring your own things to the
right,
table.
right. And if you look at just like for instance, like chiropractic offices, they always offer so many services. It's the chiropractic, it's the masseuse, it might be some other form of therapies that they offer. It could be a lot of them do like CBD products, etc. So you know, they have a whole line of services and products that they offer. And same thing with dermatologists. You know, they might do lasers, they're going to do fillers, they're going to do lotions and everything, right? It's the same process. So when you're thinking about yourself, those businesses do that because it's multiple streams of revenue. It's diversifying themselves, it's branding themselves, and you got to think of yourself as your brand as well, right? How are you going to present yourself, and how are people going to think of you when they talk about you?
All right, perfect. So now let's get into stock. So now you get the motivation. You get it from me and from Eric, who has shown you how to do this from clinical research
So
perspective.
I
Build
actually
your
have a
brand.
question from something you said, Dan. So you said you have to put yourself out there. Do you mean you have to be an extrovert?
It depends what you want, man. Like I'm talking to the Patreon people. There's a small group of people that all want this. They want like they have ambitions to do things, and
Mhm.
marketing is a way to get that done. The most effective way to get that done is through social media marketing. So if you were like, let's say Eric had like a twin cousin or a twin brother. It wouldn't be a twin cousin. A twin brother who was just happy to be an employee. All right. Like the rest of his life, just work for the drug company. I wouldn't recommend they get on social media. I mean, that's, you know, who cares at that point? If you want to go ahead, but like these are people who want to do side businesses. They want to grow their businesses. The only way I see is like to get more eyeballs is to get on social media and build your
Yeah,
brand.
I mean, so while I was in my MBA class, right, the number one thing that they all pushed, it was uh, just e-commerce, right? Everything is e-commerce. If you are any business, it's e-commerce. If you're not e-commerce, you will fail, right? So that's how it is now. You have to use social media. You have to use Instagram, YouTube, Twitter. You have to have a website. You have to have a way to make sales online. You have to be able to work
Yeah.
internationally, right? So if you implement all those things, you are setting yourself up as a more competitive company rather than just a brick and mortar company.
And we got a lot of introverts in this room. And you know who's an introvert? Elon Musk. Elon Musk, an introvert, and
He's
he's
a
like the
horrible
best entrepreneur
speaker.
out there.
Yeah,
He's a
exactly.
terrible one. So, and he's doing a great job on Twitter. Like his tweets become memes. Like there's, you know, he's an excellent marketer.
His tweets move the markets. That's what
They
his
do
tweets
move the
do.
markets.
Yeah.
That's actually a perfect segue. But does that answer the question, Chris? Because this is like a core group of patrons in here, and we need to make sure that their actions match their ambition.
Sure. Basically, what I was going after is in research, I would agree to a degree you need to be an extrovert. You own a site, you have to kind of be able to go out and schmooze people. But if you're buying properties to rent, I wouldn't say you so much need to be an extrovert.
Yeah, I guess they're different types of personalities, but I think when you're in business, it takes someone who's outgoing, someone who's personable, right? Like one of the greatest, I think, characteristics someone can have in business is being able to adapt to other people, right?
Oh, absolutely. Be a chameleon.
Like if Yeah, like if someone that you're talking to is just really into family or something, right? They have something really personal. You have to be able to relate to that person on that level as well
Certainly,
in your
certainly.
in your conversations with them, you know. And I think that also relates to any form of business that you're doing, but also if you're on YouTube or Instagram, and you got to be able to just communicate well with people.
That's part
Yeah.
of sales. I mean,
And-
that's
and-
Yeah.
one of the principles they teach in sales is be a chameleon.
Mhm.
And to
Yeah,
go one
exactly.
step further, Chris, I mean, yeah, you may not need social media if you're just buying real estate and renting out apartments, but what happens when you run out of your capital and now you need to attract investors? You
Yeah.
know, either you settle with what you've achieved, and a lot of people are fine with that, or if you're ambitious and you want more, I mean, there's really no other way other than putting yourself out there, maybe going to conferences, maybe going to webinars, maybe writing books. You know, Dr. Hazen wrote this book.
Certainly.
Shit,
So
but
it's a
she's a
great
microbiome
book.
person. It is a
Um,
good book.
my point to the question was not all people are extroverts. So you're not pigeonholed just because you're not an extrovert, right? You can be an
Yeah.
introvert and still succeed. You're just going to have to find what works for you.
Well,
Introverts
I
have
also
the
feel
best
like by
info.
using those terms in general, you're pigeonholing yourself into the categories, right? So
Certainly.
I think it's best to not think about things like that. I mean, like you have to think about what you want and focus on what it takes to get there. If you don't know something, you have to educate yourself on how to do that, right? I mean, let's say I did this in the past year on stocks. Like I knew nothing about them other than, you know, a couple big ones to put my money in, but like I didn't know, you know, what's the strategy to buy and how to invest and so forth. So I had to teach myself a whole other genre of business and investing, right? But it's the same thing. Like if you are thinking about something that you want to do, if you feel like that requires a different personality, a better speaking skills, etc., then you got to, you know, teach yourself whatever it is that you're lacking.
Yeah, completely agree.
Yeah, and sometimes the introverts are like they have the info in their head, like, and they oftentimes are very good writers, or you know maybe they're afraid of video, but they can do a podcast, or maybe like they're afraid of both of those, but they can write like crazy articles, white papers, write a book. So there's always a way to put yourself out there. Like the lady who founded the CRISPR technology, she's kind of an introvert, but she's published in all the magazines, right, with her her findings, and you know part of her journey was to learn how to become more entrepreneurial. And
Yeah,
so
she thinks Tesla's going to 3,000 a share in
Right.
by 2025.
no, that's Kathy Wood.
Oh,
But
I thought
I'm
Kathy
that's
talking
who
Wood.
you were
about
referring.
Jennifer.
Oh, not CRISPR. I'm sorry.
Yeah,
Yeah.
Yeah.
Founder, she won Nobel Prize, Jennifer Doudna. But Kathy Wood is like also somebody we can talk about. ARC. Maybe we move into, like, let's do this, guys. Let's share. What's this? KMPH,
Ew.
guys. KMPH. Me and Chris know it well. Geez, man, this stock is stubborn as hell. If they came out with an announcement that they're doing like an NFT or something, it would still go down. This stock is fundamentally sound, however. They have an approval on the ADHD drug. They've got no debt. They've got no expenses when it comes to sales. It's only a matter
Huh.
of time before fundamentals catch up. I'm Chris, I'm thinking of buying more, like if it gets lower.
Well,
But
I
you
have
have
yet.
a
I have
52-week range from $1.94 to 22. Whoa.
Yeah, but this was before the FDA approval. They just had FDA approval on like 2 weeks ago,
16th.
on the 16th of February. The FDA approved their pediatric ADHD drug, and the stock went up for like a day, and then it crashed.
Okay. Got
And
it.
it's been right around $10 to $11 since.
Okay. Okay.
This one
Yeah, the
fundamentally sound.
pharmaceutical and biotech companies are so hard to, I think, because like you can predict, you know, like what you just mentioned, all that information sound, right? It makes absolute sense, but I think the markets don't appreciate it in the same way, right? Like if it's a tech company, they get it right away. I think when it goes into these types of companies, they don't get it.
Yeah.
So
Yeah.
so it takes some time for these things to build. Like Moderna barely kind of started blowing up this past year, right? So
Exactly.
it
But
just
look,
takes
if you look
some
at
time.
if you look at what Joey said, because he said 22 was the high, and
Mhm.
that was on a rumor, right? This was
Mhm.
before the FDA approval,
Isn't
then
that
it hit
crazy?
22. So now we have the FDA approval, the rumor's out, everything stayed the same other than the drug's approved now. right? So
Right,
the risk
right.
is technically off the table. And now they have 2 more drugs in pipeline. The same drug for adults, that's probably going to get approved too. So this stock, I could see this easily being $20 before the year's over. Maybe even before summertime. I mean, it's a matter of the fundamentals catching up to the price catching up to the fundamentals.
Yeah. Well, it's the same thing like you just mentioned the rumor and the news, right? They always say buy the rumor, sell the news. So
Yeah.
you know, so like as soon as something is going to come out or they think it's going to come out, that's priced in pretty much at that point, right? So and that's why you saw that sell off, because then the news broke and then everyone already knew what's going to happen, so then that's why they sold off. So you know, if they have some other potential news coming up, then that would also be a way to, I think, predict that this price would shoot up again. You know, so if they have some other big news coming, that's potential at least.
Yeah, one of the things I use is stock twits to see like, the overall sentiment of the market. But before we get into Eric's, because I'm gonna go to your Instagram to pull up the stocks you recommended.
Oh yeah.
But let's do the CRISPR ones real quick. There's 3 main CRISPR companies, NTLA. This is all the gene editing. Guys, they can freaking edit your genes now with the bacteria. I'm gonna do a whole video on this for my YouTube channel.
You should.
But basically they discovered that bacteria fight viruses by changing their DNA, okay, in the
Right,
bacteria. So
right.
people found this out and they can now do it in humans. Like it can be done. You can rewrite your genome.
And
And
that's to fight sicknesses, or what's the like
any
purpose of it?
genetic, well, so far they're trying it for the furthest one is sickle cell
Mm-hmm.
anemia.
Mm-hmm.
But they're also looking at like blindness, leukemia, um,
Hmm.
basically genetic. Right now, it's single gene genetic diseases, but they're eventually going to get into multi-gene diseases. And there's 3 main companies that do this, and the one that was founded by Doudna, amongst other people, is Intelia, NTLA. Um, so if you look at 52-week range from 11 to 92, but this is just getting started. This is like buying Amazon like in 99.
Really?
Yeah.
All right.
CRISPR is the other one, which Chris and I have been losing money on all these, by the way. Um,
But hey,
I've heard of
long term,
CRISPR, but I
long
haven't looked
term.
into it.
CRISPR's good. It was founded by Emmanuelle Charpentier, which is this French lady who co-founded the technology with Doudna, and they started working together. Then they started not liking each other because technically the enzyme that rewrites the genes is called Cas9, and Doudna and her team went from Cas1 to Cas6. The French lady found Cas9, but Doudna found that you don't just need the enzyme, you need the transfer RNA and you need the
Mm-hmm.
CRISPR RNA all together. So she's the one who like pieced it together, but then the French lady got mad that, well, but Cas9 is the best enzyme, and that's true. So they're both like right, but they were arguing about who should get the credit. So then they like started their separate companies. So the French lady has CRISPR, CRSP, because she was first, and Jennifer Doudna, who's like the lab nerd who had to learn to be entrepreneur, founded Antelia. And then there's one more because there was a Chinese dude who's like our age from Iowa. He's American, but his parents are from China. He founded Editas, uh, symbol EDIT. Right now, they have 2 things going on for eye, some kind of genetic eye conditions, and so he was also in that race. Actually, he was the smartest business person of all 3, and he was first to try to get the patent and put everything together. But he was more on the business applications of the genetics, whereas Jennifer Doudna was more on the like lab, and then Emmanuelle Charpentier was kind of like a mix of the 2. So these are the 3 leading companies for CRISPR. I don't think you can go wrong with any of them. And Kathy Wood with ARC-G
Mm-hmm.
owns all of them. I don't know if you guys know about Kathy Wood, but she's like a hero of mine.
Yeah.
So this is ARC-G. They own like it's a portfolio of like all these genomic stuff. ARK Genomic Revolution, and she
Oh, so it's
actually has 5
focused on
ETF.
genomics.
Yeah, she has 5
Okay.
ETFs, but ARKG is focused on genomics, but she has ARKI focused on technology. She has ARKF focused on financial tech, so like
Gotcha.
PayPal.
Which one do I follow? Let me see which one it is.
She's good. She has
Mine just says it's ARKK. That's the
yeah,
one
that's
I'm
the
following.
tech one. I think that's the innovation one. So I think they have
Yeah.
Tesla in there, and they
You're
she
right.
just upped Tesla's price target to. She said at bullish case in the next 5 years, Tesla's a $5,000 stock, and
Mhm.
she said at bearish case, it's a
3,000.
$1,500 stock.
Oh, 1,500.
Yeah, that's
Okay.
in the next 5 years, or what did she say?
Yeah, that's
That's
what
by
Kathy Wood said.
2025.
Yep.
Yeah.
And her argument's actually interesting because she said what people don't realize is all the data that Tesla's getting. Forget about the
Right.
cars and the battery and all
Mhm.
this stuff. They're still doing it. They're leading the AI and the data. Every time somebody drives a Tesla, they are storing that data for their AI. Their AI is computing for self-driving. They're going to be so far ahead than everyone else in the
Right. Right.
And or they
self-driving
can
space.
sell that information to everybody
Well,
else.
it's the same thing with Matterport. If you know about that company, it's the same
Yeah.
thing. You know,
No.
they
AGVI or something. The
GHVI. Mhm.
there you go.
Yeah. So Matterport is same concept. It's the data that creates the true value, right? That's why people will invest
Oh,
in
yeah,
it.
Joey would like GHVI. They're all for real estate,
Yeah.
man. They
Yeah.
are.
I'm surprised you don't know it, Joey.
Yeah, no,
Yeah.
Matterport, the company.
Yeah, Matterport, the
Yeah,
company, it's a
every listing
SPAC.
I have, I use Matterport.
Yeah,
Oh, there
yeah,
you
yeah,
go.
yeah,
There
yeah.
you go.
So I'm
So they're
contributing to the information.
yeah, so their SPAC is with GHVI here.
Yeah.
So
Oh.
yeah, like right now it's extremely undervalued. I mean the data that they have, it's really going to change the entire industry. I feel
Because
for real estate.
Eric, what are you? So I'm trying to understand the information that they would use to be able to sell, like just people's living habits, or
So it's the I guess the use of and the different uses that you could use their data for, right? So for instance, you could potentially use it for construction, right? So if you
okay.
are filming an area with their cameras, you can get the data from there and figure out. You can take measurements, for instance, of places to figure out what fits where. I think in terms of just construction, that's one way to utilize it. But yeah, I mean, it's also, I think just used in terms of different ways that they could, what's the term, like with the CAD programs, right? You can implement
Yeah.
it with CAD.
Okay.
So yeah, I mean, I don't know all of the software ways to utilize it, but I know that those different types of programs used by engineers could be implemented with their software as well. So
Definitely. Okay. Yeah.
It's
That
also
sounds
yeah,
gonna be
so
like
helpful,
Google
and I'm sure
Maps.
there was like 100 ways that you could use that information. So okay.
It's
good.
also like another application I was reading about for that thing is it's like a Google Maps for inside buildings and inside like houses.
Got it.
So like Google Maps is great, but once you get to a building, you know nothing about what's inside. Well, this is like kind of because they have all that data.
Got it. Yeah.
So that's
Makes sense.
so GHVI. So
it's,
what else? There was another
oh
one.
yes. So with GHVI though, oh, is my internet connection losing?
Oh yeah, we
Oh.
got you. You were gone for
Okay,
a
yeah.
second, but you're back. You're
Yeah,
back.
yeah, it cut out for a second. So anyways, yeah, with GHVI, like home appraisers also could appraise a property through their system without needing to actually go there. So things like that. Like there's so many different applications you can do with it, and that's why I think their company is being really looked at right now in terms of like just heavy investments.
They haven't gone. I stopped following GHVI, but they haven't announced anything yet, right?
It's for sure. I think they did announce that,
Oh, they
but
announced it? Okay.
yeah, I believe they did. I believe they did. So yeah, I mean they've Matterport is for sure with them, like 100%.
Okay. So I guess
Yeah, it
it's
says
a
it right
little.
there. It says it
Yeah,
right
yeah,
there.
yeah.
Mhm.
Okay, last month. Wow.
Mhm.
Announces an investigation. Okay, yeah, that's the one. But they're all these SPACs go under investigation by lawyers that try to make a name for themselves. That's actually another one that's been beat up. Is Clover Health.
Oh yeah, I
Investments.
have a little bit with them.
So tell us about this one because I don't have this one, but I've been looking at it.
Oh wait, is this a, oh no, this is not the one I was looking at. I was
This is
thinking
the
of
one with
the,
Chamath. Chamath owns this. Basically,
yeah.
they're taking AI to private practice, and they're basically
Mhm.
making private practice more efficient. Kind of like the carbon health we talked about, Chris. You know, we talked to
Mhm.
those guys, but these are way bigger. I mean, they're run by Chamath. Chamath SPAC actually took them public, took Clove public, but they've been under investigations for providing doctor kickback and stuff like that. Shareholder, like bunch of class action lawsuits. So this stock's really been beat up. If you look at the last year, 16 to 8. All right. So this was like at the top of the SPAC mania.
Mhm.
So it's, I mean, I hear people saying this is like a $16 stock, but I just keep seeing it go down for the last month I've been following it. But
Yeah.
look into Clover Health, guys, because they're taking AI and big data to private practice health groups, and they're basically paying instead of the doctor's offices waiting for Medicare to pay them. They just sign up with Clover Health, and then Clover Health deals with all the billings.
Oh, that's actually pretty smart.
Yeah, well, it's eventually going to be a good company if they get out of all these lawsuits. What's another good ones that we've been looking at?
Let's see.
What do I have?
A
Oh, this is
small
a really good
company-
one.
a small company called Tesla.
Yeah, Tesla.
That's what we're
Tesla,
looking at. Have you
I think
man.
I
heard of
think I've
that
heard of
one?
them. I think I've heard of them.
Geez, I just filled up
They're
my
about to
IRA with
make
it.
it.
So actually, let's go. Vive. This one is a really good one. They're going to take over clinical research industry.
Oh, Viva.
Eric, I
Yeah.
don't know if you're aware, but they're bigger than IQVIA market cap. They're $40 billion market cap.
Wow.
IQVIA
Wow.
is like 38. So they're the biggest
Yeah.
publicly traded clinical research company, and they haven't even gone to the sites yet. And I've talked to people from within, and they say we're gonna get to the sites, we're gonna start giving them free e-regulatory, everything, and then they're gonna connect all this stuff end to end. So I own a lot of this stock as well.
That's a really good one. I haven't bought them because I didn't even think to look for them. But Viva is a fantastic company. I mean, they're like the Ferrari of
Yes.
of, e- of like ETMF systems.
And now Chris will like this one. One of the guys I interviewed today said tellurian. It's natural gas. I didn't like look more into it, but he says he swears by this one.
Natural
TELL.
gas. So there's a Meet Kevin thing on natural gas, and the I didn't focus on it completely, but from my understanding is the natural gas availability is dwindling, and I think the production to produce more of it is not worth it, I guess, in the economies of it. So that I think is a dying industry. I think natural gas will go away, like for sure.
Yeah.
It's kind of like the trucking industry. It's a massive industry, but it's going to shift over to fully electric vehicles, right? So every single company producing gas vehicles for trucking, it's the same thing. Those companies will go out of business unless they are able to produce some sort of hybrid or electric vehicle.
So
But yeah, this natural gas thing, the natural gas itself, from my understanding, is the availability of it is dwindling, and I think they're even projecting when it will not even be sustainable, I guess, to use anymore.
so now I'm at Eric's Instagram, how to clinical research, how_to_clinical_research. And by the dip, Eric, I love the enthusiasm because let me see here. I was laughing when I saw one of your posts the other day because in January 29th, I remember I saw you said Tesla 797. You're like, guys, use this opportunity to buy Tesla.
Yeah,
And
buy
then
it all the way down.
a month later, it's at 654.
I know.
Buy the dip, guys.
Yeah, you just keep buying it. It's a free fall, and you just keep buying it.
I've been literally buying it every single time it kills
Yeah.
down.
Yeah,
I know. Okay, so
I'm
you got
still doing it.
Tesla. You
I've
got
burned
5
through
days
all my
ago.
money already.
Yeah, me too.
I
Me
just
too.
keep putting cash in
You
it.
have Enphase Energy. as well.
Yes.
So let's see what's
Yes.
this one. What's the symbol of this one?
ENPH.
Okay, ENPH.
Mhm. Yeah, so Tesla and Enphase should really be the, I think, top stocks in anyone's
I've never
portfolio.
even heard of this one outside of you. This is why you guys need to follow Eric on there. On
Yeah,
Instagram.
so Enphase, they're a energy-based company, but they are essentially a competitor to Tesla in that space. So if you're investing in Tesla, Enphase is a great one to invest into, especially right now while they're under $200. That's a fantastic price. Their, their income, their financials are just on point. These guys are a strong company. I mean, there's no reason to even worry about your money with these guys.
Oh, they actually have earnings.
So what do they
Yeah.
produce? Electric vehicles or just like
No,
batteries?
no, it's like solar energy. They might do some batteries as well. I'm not entirely sure on that, but they compete with Tesla in the energy solar panel space.
That's a
So
cool.
yeah, and they're a solid company, solid. I mean, it's the same thing like Neo and Xpeng. I mean, these are all companies that kind of are surrounding Tesla. So if you're investing in Tesla, it's a good idea to invest in these companies as well, because they're all going to be part of the pie, right? In terms of
Right,
who's
yeah.
Chris, no
controlling
cheating.
the
No
market.
cheating for our contest. You can't choose any of these stocks that Eric Lambert is giving you for our contest.
Yeah, he only gave two. This one and Tesla. Already
Is it
have
a Tesla?
Tesla.
Well, we're about to go to a
Okay.
third. Oh, okay, GHVI is the other one, which we looked at.
Yeah, that's the Matterport SPAC.
Churchill Capital, CCIV, the
Yeah,
is
that's
the
a
CCIV?
Lucid.
The Lucid
Yeah,
motor, right?
Lucid Motors. Yeah, so that's another one you got to put money into. Right now, it's in the 20s, and that's a good price. It's gonna be a pretty heavy stock, I think, it's at some point. So like right now in this first year, I think they're only producing something like 6,000 vehicles. So it's obviously nothing compared to like a Neo or an Xpeng even. But in terms of true competition for Tesla in the United States, this is the only company. So there's no other company competing with them other than this one, at least in the
CCIV
US.
is good if you want to. Now it's become a long-term play. This one, I usually screw these up, especially with biotechs. I really
Mhm.
screw them up. But this one I played right. I got in like in the early teens, and I
Yeah.
got out like at. I didn't get out here. I got out like at 39.40 price
Okay.
range.
Yeah, it's good.
Before any like news came out, I was like, no, this thing's getting too high. Even if they do
Well,
merge, this is too much.
buy the rumor, sell the news. That you did. You did
Exactly.
it
There you
perfect.
go.
You
I
did it
did that one
perfect.
the right way.
You did that perfect. So, but right now, if you wanted to buy in, it would be a good time. And in the low 20s, it's a great price.
This reminds
so
me of KMPH actually. Like this is the spec version of what I didn't do right. Probably because I think I know more than I do about biotech, which is, probably saying something there. I should have sold this one like around here,
mhm.
but instead I bought it around 10. I think I averaged at like $10.03. And then I should have got out right after approval. I didn't hold this long either. I had like 2 weeks. It went up to 17 and I was like, no, this is gonna be like $30. So then look what happened. It went back to like where I bought
Right.
it. So I played it
Right.
wrong. This become a long-term hold. This is exactly like it reminds me everything of CCIV.
Yeah, and I never really swing trade unless I'm just feeling like to do something because I'm bored. but I typically just, I mean, any company I put into, or any money that I put money into, or any money I put, what am I saying? Any company I put money into, I'm going to view it as a long-term hold. So
Me too.
so CCIV, I think it's going to be a major competitor to Tesla at some point. I don't think they're ever going to beat Tesla. I don't think they're ever going to be bigger than Tesla. But I
No.
think
Well, why do you think that? So for Churchill, I'm surprised that it hasn't taken off more. Do you?
Well, yeah, it's because they're priced really high for not having sold a single vehicle.
Okay.
That's the issue.
Okay.
But after this year, if we see them progressively do more and more, you should see that price going up now, right? Because a lot of it was hype. The reason why it got so high was just people were excited about it, and by the time the news breaks, there's nothing to be excited about anymore,
Right,
and that's why
exactly.
that's why it goes down.
Gentlemen, I must dismiss myself. I'm being yelled at.
Oh,
Second.
Go do your thing, man. I won't tell you which
Yeah,
stocks
pretty much,
we
Joey.
talk about. I
Sorry,
won't tell
Chris.
you which stocks. I won't tell you which stocks, Chris.
All right,
Yep.
you guys have a good evening.
All right, you too.
Take care, Chris.
So the next one is Palantir, which I actually own as well.
Palantir.
I'm a fan of
Yes.
this one, but can you give us like maybe like a brief overview? And Joey, are you in this one?
No.
This one is like a Joey stock. I don't know why you're not in this one. This is
Oh
like
shoot.
I look at this stock, I actually think of you.
Oh, there we go.
Can you give us a like a well actually GHVI I thought of you more with Matterport. But this one
Okay.
Palantir, it's all about big data.
Oh,
Eric, why don't you give us like a little overview of this one?
Yeah, I mean, Palantir, I need to buy more of, and the reason why I haven't done more is because I haven't like done like a full like research on them. But I know that they are, they're in the news, right? And they have a lot of media hype behind it. But I also know that Meet Kevin invests in it, and if Meet Kevin's investing in it, I'm gonna invest in it.
And
But
not so much because me Kevin's like cool and all that, but because he's influential and he has got all these
yeah,
people that do
right,
whatever he says. So
yeah,
it's
yeah.
kind of like GameStop with Reddit and all that.
yeah.
Yeah, it is kind of like that. But with GameStop and Reddit, that's a totally different kind of I think mindset with investing, because what they're trying to do is they're trying to beat the suits, right? So if the suits are shorting something or whatever it is that they're doing, they want to do the opposite, right? So
Exactly.
so everyone knew that GameStop was being shorted and they wanted to push it up. So it was a way for them to get back at the suits, quote unquote, to say, hey, you guys don't control the market, we do, right? What me Kevin tries to do is really provide some fundamental analysis on these companies that he invests in, and as to why he thinks that they are undervalued. It's the same concept as to how he buys real estate, right? So he buys real estate by finding something that is below market value that he could put in some cash into and produce hundreds of thousands of dollars of net worth through it,
Yeah.
right? So it's the same concept when you're looking at stocks. You want to find something that has a really high upside that's not even being tapped yet, and it's not even appreciated by the market yet. So I think a company like Peloton is an example of that.
Oh yeah,
It's a
that's
it's a
coming. We got that one
yeah.
on your we're going
Or I'm
so
sorry, yeah, Peloton and Palantir, right? So
yeah, Palantir. Yeah,
yeah,
yeah.
yeah.
So
So these
Palantir
companies
is
are.
in Kathy Wood's ARC.
Mhm.
I'm in her ARC K,
Right.
and okay, so she owns
Oh,
CRISPR. She owns
Exact
CRISPR.
Sciences.
Oh
I work with
wow.
them.
Oh, you do? So you know what? She has ARC K, which is for innovation, so it's more broad, and then she has
Mhm.
ARC G, which is very narrow for just genomics, and she owns CRISPR in both of those.
Okay.
CRISPR Therapeutics. But
Hmm.
I think Palantir is on here on this particular. And
I think
Joey, I
the
gotta send you
key.
the PowerPoint.
Yeah, I was
I
gonna
don't
say,
know.
tell me this.
I don't know enough about the ARC platforms. I know that they're solid though, but I think the biggest difference with Kathy Wood with these ETFs is she does not transition these stock. Like for instance, she buys when they're low rather than selling them off and going to something that's going up, right? So the typical bond or typical fund is going to say, oh no, these stocks are going down, let's jump out and grab something that's going up, right? So like during this last crash while tech was going down, all of them went over and bought all the recovery stocks. But that's not what a smart investor would do, and that's what I think ARC where ARC shines, because rather than transitioning, they buy more, right? So
Right.
they're gonna do like a more heavy investment into stocks while they're red, especially stocks that they think are undervalued.
Yeah.
So I think that's the smarter way to invest. Obviously, if you're doing all of your own investments, that's how you want to invest. But if you are investing in an ETF, you would want the ETF to invest in that way. So
Yeah, here's her holdings in ARC W, which is Next Gen Internet ETF. Kathy Wood, Joey, she's a beast. I'm gonna send you her PowerPoint. It's
Yeah, keep it
120 slides of just craziness. But so this is she owns Palantir in that
mhm.
holding. Okay, next one on Eric's list. And by the way, we're gonna have a link to Eric's Robinhood. If you're not on Robinhood, I guess you'll send me this, Eric, so I can put it in the Patreon.
Yeah, I'll send it over to you.
Okay. The next one on your list, Neo, NIO. Can you give
Neo,
us? Can
Yeah,
you tell
what
us what
is
this
up
one
with
is?
that one? That hasn't jumped
absolutely.
that much though.
Yeah, no. So Neo it's a great company. So Chinese electric car company.
Yes.
They do battery swapping. So
Right.
what you do is you buy the vehicle without a battery essentially, and that creates the price to go way down for the consumer, right? And for the business side, they're now leasing the batteries to you. So you get to go in and get a new battery rather than charging it up. They just put a new battery in there for you because you're on a lease program. So that's like continual revenue or it's continuous revenue for the company, and then it's creating simultaneously a lower barrier to entry for the consumer, right? So in business, you always want a win-win, and that's a perfect example of a win-win. So I think their business strategy is insanely intelligent. I think that they are, obviously a Chinese company is going to have backing by the Chinese government, so they have that.
And not only on that too, Eric, but didn't I hear that China made a pretty soon date to where all vehicles need to be like electric or some sort of renewable energy? And so I feel like that's one of the reasons why, whether it be Tesla, Neo, and anybody else that goes into China, it's like there's a huge need in the future. I don't know what that date
it's a
is.
massive, I don't know that date either, but I know that is a major concern with China, right? So that's what they're pushing for, and that's why Tesla. I mean, if anyone knows anything about China, I mean, you can't be an American company and go into China; you will fail. That's why Uber failed, right? But that's why Tesla is not failing, because they happen to be something that the country needs, right? So for as long as Tesla can maintain that kind of power with them, that type of leverage, they will succeed there. So especially when they have a factory there. I don't know other factories, but every single factory that they have, I think, has the capability to produce up to like 1 million cars a year. So their potential growth is just off the charts. So that that's why Tesla remains number one. But Neo is a fantastic company because of all those reasons that we just mentioned as well. Plus, they have a pretty unique business model.
What would the benefit be for the consumer of having batteries swapped out? Just that you can upgrade with the times. Like, let's say, my Tesla battery now, if I had a Tesla, but my battery now goes 300 miles. In 5 years, whatever I'm leasing at then could be 500 miles. Or what would the benefit be to swapping those out? Because that's the one thing I didn't fully.
Yeah. So I think the benefit, there's a couple of benefits. One is keeping the price down of the vehicle. That's the number one benefit. Second benefit is I think that you're touching on is the longevity of those batteries. You don't have to worry about your battery eventually dying like you would with a Tesla, right? At some point in time, especially with the batteries being integrated into the frame of Tesla,
right,
that's going to mean that your car will be totally useless at some point in time, right? But that's also why Tesla now has the 1 million mile battery to make sure that lasts a very very long time. So those are two different methods that are strategies that they're using, and I think that's what differentiates the company, because they're not trying to copy each other in any ways. I think they just have their own unique creative means of producing these vehicles and being competitive. So
at this price point, is the price right for this for Neo right now?
The price right.
Is the price
right? Yeah, I think 45 and down. Absolutely.
So, okay, let's save that for the end. Xpeng.
Yeah, another Chinese company.
You'd love these Chinese companies.
Well, if it's electric vehicle, I'm definitely in. so yeah. Xpeng electric vehicle, Chinese company, competitor to Neo, smaller than Neo, obviously smaller than Tesla, but a major player as well. I don't know their competitive advantages as much as Neo, so I do put more money into Neo, but I don't forget about Xpeng. I definitely, I still buy them.
And then I have there's two that I really want to talk about, and then there's one I haven't heard of. EXP World Holdings.
Oh yeah.
What's that one? I haven't heard of
EXPI.
that one. EXPI.
Joey, do you know about them?
About that one,
yeah, do it.
Joey knows about that one. What
come
is this,
on,
Joey?
let's go. It's real
What
estate.
the heck is this?
Yeah, let's
real estate.
I would assume so. Yeah.
Sell.
Exactly. Buy low, sell high, right?
Yeah.
Okay, EXP, they are. So I'm with a realtor with Keller Williams. The guy that started EXP came from Keller Williams, and he started basically an online brokerage that is in one way similar to Keller Williams. And what I mean by that is Keller Williams started a long time ago a capping model to where a real estate agent, there is a certain dollar amount that they are capped at in a given 12 months. Unlike some of the traditional brokerages like Remax, Century 21, you might be on an 80-20 or a 7-30 split no matter how much you sell. Keller Williams says that, hey, there's a certain dollar amount, and once you reach that, then you're at 100% commission. So EXP took that and expanded on that. And EXP is really for real estate agents that don't want a brick and mortar office. And so their cap, the amount that they pay their broker for a real estate agent, is less than half of what it is for a normal, like Keller Williams agent. So the benefit
really?
of that is for someone that wants to work from home, doesn't need an office multiple days a week or every day. They're comfortable and content with working out of their house, or something like a WeShare or a what is it? A WeWork, excuse me, WeWork, where you're in a group, kind of office space. If you're cool with that, and you want a smaller fee that you pay your broker, then EXP is a really good option for you, because instead of like some of the Keller Williams caps, or you pay 28,500 to your broker, and anything over that you get 100%. And I believe EXP is like $8,000 or $9,000, so it's significantly less. Now you do, it's you get what you pay for, so there's a little bit less resources than somebody that has more of a traditional brokerage. But I mean, again, there's a cost benefit analysis for everything. So EXP is, I think it's like 15 or 12 years old. It's not brand new, but because of the pandemic, their stocks are definitely going up. But they have had a little bit of a dip lately, as we're seeing right there.
Right.
But yeah, it's a great option. Yeah, it's a good option for somebody that's remote, doesn't need an office, knows a lot about real estate, doesn't need a broker to
Wow.
ask questions on.
Did they reach out to you? Is that how you know about them? They try to get you?
Yeah, I have a lot of agents that are trying to get me to join EXP.
Ah,
Yeah.
they
Yeah,
get
I
some
mean,
kind of
so-
a bonus.
Yeah. I mean, I want to get my real estate license. So if I do, I would probably do the EXPI thing. It's a fantastic option. But that is changing the industry. Like I think this is the future. I think as the industry goes along and this develops more, I think there's going to be more competitors to EXPI with this business model, because I think the standard companies are going to feel that pressure that this company is going to put on them, and I think they're going to force this market to change. So EXPI, man, if you're looking to like the future of the real estate industry, I mean, this is a company that's doing it.
Which one of these guys came from Keller Williams?
It's that founder. Yeah, right there.
Glenn Darrell Sanford?
Yeah. And the only thing, so let me
Let's hit him
give
up on
a
LinkedIn.
skeptic's point of view. The only caveat to that is, like, with real estate sales, especially like the contracts, it's very complex, especially if you're brand new. And I've been seeing a lot of like brand new agents. I almost know that you're brand new if you work at EXP, because it's more of a cheap option, if you will. And so I guess the only thing that I think that they are going to have struggle with is that I think that the consumer could be negatively affected, is that it's a lot of agents that are brand new that don't know what they're talking about. They don't have an easy access to a broker to get questions answered with complex matters. Real estate sales and buying real estate is different than buying a car. You can buy a car online for sure. Buying a house is 100 times more expensive than your car. And there's a lot more areas that you can get sued in than buying a car. So I think that's the one thing that I think technology could have, and brokers like this could have problems with. Now, the benefit, though, I think that it is going to be a positive on the real estate environment, because it's going to push brokers like mine to be more competitive, right? And to be more competitive in their fees, in their services, and all of that. But
wow.
in my point of view, if you're at EXP, I almost think that you're like a new agent, and I'm gonna walk all over you.
Yeah,
I'm
and
not saying that's for everybody. I know some very top producers at EXP that sell a lot more real estate than I do. So I don't want to say that's a blanket statement for everybody.
Really?
But more than often, I almost feel like, oh, you're a new agent. You don't really sell any real estate, and that's why you need a low cap.
So this is better than Redfin because I own some Redfin, and they're about the same market cap, 6.8 billion each.
I think Redfin is a good stock to buy. I mean, if you're investing in Matterport, you should invest in Redfin.
You said it's good. You think Redfin's good?
Yeah, I don't have their stock, but I will get their stock at some point.
I own some of their stock, but not a lot. It's just the I was actually playing the earnings because they were the closest real estate company. Last
Show me their earnings.
last month they had an earnings call, and I knew they were gonna kill it, and they did. So I was gonna get out, but the price never actually reflected their great earnings that they had. They had their best earnings
turned a profit last quarter.
Last quarter, they was their highest ever sales. I don't know if they turned a profit, but like they blew earnings out of the water from their projections. And so I was gonna trade in and out. I was basically playing real estate. Like I think undervalued right now or underrated, and it never did. So I'm still in it. But EXPI, that's the interesting one.
But I'm also a downer on Redfin. Again, I think it's because
you hate Redfin.
I'm biased. I'm super biased.
And you hate Zillow, but you know what? Kathy would.
You hate Redfin? How do you hate Redfin?
Joey hates Redfin. Let me tell you, Joey's a realtor. He hates Zillow. Every realtor
he hates EXPI.
Every realtor hates Zillow.
I wouldn't have put my own money there because I think that they're going to have. Same thing with Zillow. I think Zillow, Redfin, those are a little bit different than.
Kathy Wood's betting big on Zillow. Zillow's in like two of her funds.
I saw it on the list, and I was very surprised. But Zillow's doing a lot of changing right now. And actually, give me 2 seconds, and I'll tell you why. So Zillow, we'll skip Redfin for right now. Zillow, I think there's a huge liability for Zillow because how they get their information. All their listings comes from realtors on the MLS. And there's big brokers, Keller Williams, Remax, Century 21, all the big names. What's going on is they're suing Zillow and the National Association of Realtors in the multi-millions because of, obviously, Zillow's kind of a competitor to ours because they're taking our listings and syndicating it on their website. The second that the MLS
realtors hate Zillow.
Well, not necessarily. I think don't get me wrong, they did what our brokers should have done years ago, which is create a simple way for the consumer to search for homes. And it wasn't a simple way before. But I think the liability for Zillow is the second that the MLS turns off the data, Zillow's gone. Because now they don't have to do that. Say it again.
You think the MLS would actually do that though?
Yeah, they're on contracts.
Wow.
The data that Zillow has is on contracts. And the second that one of these lawsuits between all these big brokers that are trying to stop the National Association of Realtors for sharing that information, Zillow, Redfin, Realtor.com, Trulia, all those guys go away. So that's why I'm skeptic. I wouldn't myself just because I'm super biased. I wouldn't put my money there. But there are stocks, especially Zillow and EXP, are doing really good. So I can't hate too much on it. I don't hate them.
Wow, you're right. Rex sues Zillow over the National Association of Realtor over listing display.
And not only that, but a broker, like I can choose not to have my listing when I'm publishing a listing tomorrow. I can choose for it to not go on the on Zillow. I can choose that if I want to. So I think it's one day there's not going to be a Zillow, in my opinion. I'm going to go out there and think one day there's not going to be a Zillow because
nothing's forever. You know, nothing's forever.
True, but I think in the next, let's say 10 years, I think one of these big brokers, Keller Williams, Century 21, all these big guys, they're going to come out with like the MLS.com, That's where the consumer is going to go, because Zillow, Trulia, Redfin, Realtor.com, there's going to be so many lawsuits that I don't think that they're going to be
Who
around.
owns Realtor.com?
It's somebody like Zillow. Zillow doesn't own them, but it's an independent. Realtor.com has nothing to do with like
The MLS?
the MLS, right?
Oh, they don't?
Yeah, they pay a royalty for Realtor.
Who
Wow.
owns the MLS? Is it the broker firms, or like who
I
who controls that?
It's kind of like an HOA. Like I pay a fee for the MLS.
Okay.
I think it's user funded, right? So
Okay.
I pay money every single year
I
for.
think
So
it's like
Zillow would do the same thing then, right? They would pay the same kind of money to use the platform.
Right, but it's not their listings. It's mine.
Right.
Right, because
But okay, so the way I view that is like the realtors need Zillow and companies like them, just like Zillow needs the realtors, right?
right
And
now,
yeah, and I feel like the way that just markets in general are going, just you know, it's obviously everything is online. That's why EXP is blowing up, I think.
Yeah.
You know,
that's a good
everything
one.
is, yeah, like everything is about being able to be, I think, independent right now, because you have these platforms through, you know, just online services.
Yeah.
So you know, I don't like you're saying that these large firms will win. I feel like they won't, because I feel like the market is pushing against them. You know, they can't control, I think, the trends of where people want the market to go. You know, so
Yeah, but that's in the same aspect. I can play devil's advocate, because right now
mhm.
Zillow's trying to control it, and Zillow's
I think they're going with it though. I think that's what they are. Like they're representing that kind of movement, you know. And
I
not
don't
that I'm a
I don't
fan of
necessarily
Zillow.
think
Like
so. I don't
I don't
necessarily
like Zillow
think
very
so,
much.
because like with Zillow, like for one reason, like I for sure agree that
Mhm.
information should be easily accessible for the consumer. And 20 years ago, the big brokers did a horrible job by that, which is why Zillow came out, right? And they saw that need. They're like, dude, it's so hard to find out all the listings in Lake Forest.
Right.
20 years ago, you couldn't do that, or 25 years
Mhm.
ago, you couldn't do that. You would have to go to
Mhm.
Keller Williams, Century 21, Remax. You have to go all these websites and or all these offices, and that's annoying, right? That's super annoying. But I do think that one day there's a way that they could fix it, because yeah, I think there's one day that there's a way that they could fix it, because right now, if you kind of think of it, Zillow is taking the information that's not theirs, sending it and letting the consumer see it, and then they're controlling who the consumer is in contact with. That to me, that's not a free market. That's what I call a dictator, right? Because when you
Mhm.
click on contact agent, that doesn't go to the listing agent like the consumer thinks it does, right? It goes to an
Mhm.
agent that pays thousands of dollars a month to
So,
advertise.
so my argument would be, look at Zillow's market cap. I mean, I haven't looked into it enough to make a decision, but like your argument's really good. MLS could just say, no, we're going to do our own Zillow, forget you. But look, money talks. These guys are $33 billion. They
Yeah.
can just throw money at it and say, okay, well, let's double our price, triple it. Who
Well,
cares?
that's why they're still here. That's
Right.
exactly what's going on.
Right.
That's exactly what's
Right,
going
but
on.
if they're still growing, like I mean, the argument is they haven't even really reached their peak. Like they want to get to
Sure.
the point where they can actually control the listings themselves, and then they can bypass the MLS at some point.
Yeah.
Maybe in
Well,
10 years.
They would never be able to do that.
so going on to like your point, Joey. So for instance, like when someone goes onto Zillow and then they get connected with a realtor, that for sure happens, you know. But like I'm thinking about like my own personal uses of it, which I'm sure other people use in the same way. Like I don't like to have my agent find me properties. I like to find my own properties, you know. So like but it's the same concept. So I'm gonna go looking on Redfin and Zillow, whatever, and I'm going to find the properties that I'm interested in, and then I'm just gonna tell my agent, hey, these are the properties I want to see, right?
Yes.
Like, and that's still the same concept though, because like you're saying, you can click the agent that they're connecting you with, but you can also just use your own agent for that listing, you know. So
Yes.
I mean, that's the way I personally use it. I would imagine others use it probably the same way. So
Yeah.
I'm not sure who's using it more like that, but I mean, you know, that's why I feel like it benefits everyone at the end. Like it's like the circle that's, you know, going where, you know, who's owning the data. But I feel like I feel like, I don't know, the way the market works, I think it kind of naturally kind of dictates what's, you know, I think where the market will go and what's healthy for the market, you know.
Yeah.
So
I know what you're,
I think in
completely know what you're
terms,
saying. Yeah.
yeah, and I think in terms of the data ownership, I could see that having validity obviously in court and them making some sort of ruling. I could see them changing some ways that Zillow does things, but I don't see them getting rid of Zillow. I really don't. You know, so I can see them saying, hey, Zillow, you know, you can't do this and that, but you can do all these other things, you know, and Zillow and Redfin and all these other companies will probably find a way to work around it. I mean, it's the same thing, like when they pass laws for anything, there's always workarounds, you know.
Yeah, yes, you are right. It's just that with this stuff, it's a little bit different than I just feel like it's a little bit different just because of how they are able to work and how they're able to even be a company, right? They're super dependent on all these other real estate agents. You know, just in Orange County, there's what is it, 35,000 real estate agents. And so they're
Wow.
dependent on 35,000 real estate agents posting their listing and it go to the MLS, and then the MLS give them access to photos, description, all that information. And I just think that in the future, I just don't foresee that working, because I feel like right now it's a little bit more of a dictatorship of what Zillow is doing, and I don't think that. And if anything, like the way the direction that Zillow wants to go, and I understand if I was Zillow, I would want to go in that direction too, which is to try to cut out all the real estate agents. Number one, real estate agents can make a lot of money, you know,
Yeah.
and that's why there's companies like Redfin and Zillow. Redfin and Zillow are a little bit different than like Trulia and Realtor.com, because Redfin was the first of those to start like a brokerage, so that there are actual real estate agents that work with Redfin, but they and how they offer like kickbacks and stuff like that.
Very
But
low listing fee, like a flat fee or something for the listing.
yeah, and it's really not that much less than a normal like full service real estate agent. And Redfin, I feel I don't think they have still. I think in 2019 they were $100 million in debt, or no, excuse me, let me rephrase that. They were $100 million.
Yeah, Redfin's only
negative.
6.8 billion, and Zillow's 32 billion dollar market cap. They're way big. Zillow's way bigger.
But I'm actually grateful for them, because honestly, like my clients, they start on Zillow and tell me which homes. Most of them tell me which homes that they want to go. I mean, Eric, you did the
Right.
exact same thing, right? You tell me like, hey, these are the 3 or 4 that I like this week. Let's set them up.
Right.
And generally that happens. There are some clients that I miss out on that that they think that they're going to the listing agent because they click contact more information, and then they go with another agent. They'll be like, wait, are you the listing agent? And so honestly, it's a little bit trickery for the consumer, and I don't like that. I don't like that dictatorship, because I'm for a free market, but I feel like it's not necessarily like a free market of how Zillow and Redfin are playing, because they're taking somebody else's information and saying it's their listings, and then saying that, hey, this is, contact the agent for more information, when it's not the listing. I just feel like it's misleading. In a free market, that's not. I don't feel like there should be misleading. It's a big purchase.
Absolutely. Yeah, and those agents that they list, are they their only? Like, are those agents that work for Zillow, or what
No.
agents do they connect?
No. The agents on Zillow. So I'll talk about Zillow specifically. It's just agents that pay monthly fees for different zip codes. So it's basically marketing dollars. So
pay for play.
Exactly. It's basically paying Google pay-per-click ads. So I have agents in my office, and I'm really good buddies with. They pay $10,000, $20,000 a month in different zip codes. So they'll do zip codes. That's how Zillow does it, and then sells it out to different realtors. And so that's why I feel like it's not like, if it was all like I guess, kosher and there was no like kind of like shady stuff going on behind the scenes, but I feel like it's more like mafia. Zillow's like, hey,
Yeah.
I
Well,
got all this.
here's a
we have the
competitor.
traffic. We have the website traffic. Realtors, if you want to do this, this is the price this month. Oh, and now that we have more traffic, we're doing it at a higher price, and we're using your information and telling the consumer it's our information. I don't know. I just feel like it's a little more mafia.
I can see that, absolutely.
It could be
Absolutely.
that. I
And
think it's a lot of similarities in clinical research, like pharma with real estate. They're both like the established guards that don't want to give up control. And then you got like these, like look, Open Door Technology. This is a competitor. Open. I don't know if you heard of them, Joey, but they're basically like a Zillow
Yes.
competitor.
Yes, they are.
Yeah. So I guess competition's gonna keep them honest.
So in terms of where I think markets are going, I think it's like, okay, so let's take for instance the real estate agents and like car salespeople.
Yes.
Right?
Yeah, for sure.
I feel like both of those, even though I personally want to be a real estate agent, right?
Yes.
I feel like that industry
You can have my license. I'll give it to you.
Yeah.
It's still valid like 2 more
You
years.
have it? You have
Yeah.
it? Okay. So
I use
so
it with
yeah,
Joey. I use it with Joey.
oh, that's cool. That's cool. So yeah, like I feel like that industry of being an agent is going to take like a severe hit, and that's because of, for instance, have you looked up Shift Technologies?
No.
No, I personally
Okay.
What
Okay,
is
so
it?
Shift, that's another company that I buy. Yeah, Shift.
SFT?
That's it. So what they do
Small
is they
market
sell
cap,
you
700
they sell
million.
used. Yeah, it's definitely undervalued. So like, I think their competitor is Carvana. I think that's what it's called. So
Carvana?
Yes.
Carvana, yeah. So what they do is they sell used cars online, and they're essentially getting rid of the used car salesman, right? They're just, you're looking at the car, they bring it to you, you test drive, you can purchase it. If you want to sell your car, they'll come pick up your car, give you more money than you typically would get
I think that's
trading
great.
it in. So same thing with, I think, real estate agents. I think the same thing is going to happen because you have Matterport, you have GHPI, so you're going to have like the ability to, or I'm sorry, you have Matterport and then you have EXPI. So you're going to have the ability, I think, to have agents working remotely, covering more territory, meaning that you need less agents, and then you're going to have the ability for them to show properties remotely using Matterport, right? So there's not going to be a reason, I think, for real estate agents to physically be there with you. For most things, they would be needed to do like the contracts and things like that, right, to make the sale go. But I think less of them will be needed when less of them can control a greater area, right? So that's
point.
that's
You make a great point, and I think that even right now, most of what I'm doing is more remote. I used to do a ton of open houses, and I haven't done any.
Joey was the open house king.
Yeah, I haven't done any in over a year. But
seriously, wow.
Yeah, I haven't done any in over a year. But I think, like I said before, the car industry, and especially for the consumer traveling industry, you do not need a stupid salesman. It's a simple process. Like I just bought my wife and I just bought a used Honda Pilot, and it was a pain in the ass working with a used car salesman, even though that was at a dealership at Honda. It was a pain in the ass, and I would have way rather done all that online over the phone, or excuse me, over the computer or my phone. Same thing with booking a trip. You don't need a salesperson. The thing though is with real estate sales, I don't think there's ever going to be a time in our lifetime where the real estate agent is going to be extinct, because
no, yeah, I definitely don't think so.
Because again, buying a house for $5, $6, $8, $1 million is completely different than buying a $30,000, $40,000, $50,000 car that you're going to pay off in 5 years.
Absolutely. Well, one is an asset, right? So it's
exactly, buying and selling real
Yeah.
estate is going to be the most expensive financial decisions you've ever done. And working with a professional, I feel like you need it. Just like I try to do my taxes, and I'll end on this. One of my first couple years of being out of school and having a full-time job, my wife and I, the first 2 years, tried to do our taxes online. And we're like, we're capable people, let's just say that. And it was a pain in the ass, and I'll never do that.
Yeah.
Okay.
Yeah. No, I'm right there with you.
Online and trying to sell your house or buy a house fully online without any sort of professional is
Mm.
never going to happen. Just like I
Yeah.
think that there's always going to be a need for attorneys. It might be different, but trying to sue somebody or you're getting sued for hundreds of thousands of dollars, you're not going to freaking go on LegalZoom. You're going to get a
No.
professional, a shark, to attack
That's
you
right.
outside.
That's right.
This,
That's
you
right.
know. Now,
That's
in
right. That's
wrapping,
right.
Eric, I think you're completely accurate. Real estate is changing, and a lot of it is more remote. And I wouldn't be surprised. 95% of real estate agents don't do any business. It's actually less than 5% do more than 90% of the sales in real
Wow.
estate in Southern
Wow.
California. And
It's
so,
inequality, Joey. We need socialism. We need a
yeah,
socialist.
or it's just being effective.
Socialism?
Real
No,
estate.
no socialism. What are you
And so
talking about?
I think you're right. It is
That's
changing.
inequality, Joey.
and I'm all for it. It's convenient for me not having to be in person as much with the consumer, right? I can sell more real estate if I'm at less meetings, if I'm at less showings, if I'm at less open houses.
Well, that's what I'm thinking too, because as a real estate agent, right, you could say, hey, I don't need to physically go to these properties. I could unlock it remotely, right? Because obviously there's abilities to do that now.
Yes.
I can let them go see it, or they can view it on Matterport, right?
Yeah.
And then if they want to move forward with one of these properties, I could advise them. I could do the contracts with them. But you can do that. You can do a greater volume, right? Not leaving your house. And that's why I'm saying I think less real estate agents would be needed in terms of demand, because I think more of them would be able to do a lot more than, they will create more work with the technology and being more efficient with their time frames.
Eric, you hit the nail on the head, and I honestly, I think that's exactly what's happening to me. Like I sold, I mean, just to put a little bit in comparison, like I sold in this first quarter almost more than I did all of last year, mainly because of exactly what we're talking about. And I feel like, unfortunately, like the newer real estate agents, it's going to get tougher because the more in-person stuff, what I depended on the first couple of years as I was building my database, isn't there. So someone like me, it's perfect because now it's my database, people that I know, past clients, people that I'm meeting online that are winning and they're selling more, and I can sell more without having to work 1,000 more hours, right? So I'm really looking forward for this to continue changing. And now, like, honestly, it's forced me to do better because on all my listings, like I said to you before, over the last 6 months, I've had to do Matterport because we still can't have in-person open houses. It's all private showings like you and I experienced, right?
Right.
And so I want more of that because it's more convenient for me and the consumer.
So I think that's what's gonna end up winning is what's right for the consumer.
Yes.
At the end of the day, because the difference between cars and real estate is car can be an impulse buy, whereas real estate is never an impulse buy.
Right.
Another difference is the salesman at a car dealership is never trying to let you leave. A realtor, if they get the sense you're wasting their time, they're gonna leave you. They're saying, "Hey, I'm not,"
100%.
So I think that's the main differences between the two. They're
But
not
it's just an
exactly.
example of how the technologies are pushing the market, right?
Oh yeah.
So like
Consumer's
you're
gonna
mentioning
win no matter what.
Yeah, like you're mentioning how the large brokerages are fighting this, but I feel like the real estate agents themselves are going to go with this. They're going to want to be paying Zillow. They're going to want to be working remotely. They're going to want to do as much as they can remotely.
Yeah, why can't Zillow
their time
buy?
is better spent.
Why can't Zillow buy Keller Williams or let's say another one and just say, hey, we're gonna take.
They don't have the money.
They don't have the money.
Yeah, they get 39 billion. What are you talking about?
Actually,
they just had to sell some shares. That's all they had to do.
I actually think it's going to be a hybrid of what you guys are saying. I think eventually the big brokerages are going to win. Zillow's going to go away, but the big brokerages are going to have to adapt and go more of this virtual. So I actually think it's going to be a win-win for the consumer and the real estate agents, because what we know is real estate agents aren't going anywhere, I think, in our lifetime, because of just, again, the amount of investment it takes to purchase. It's not an impulse buy. There's a lot of legal ramifications with buying and selling, and you need somebody that knows what they're doing to walk you through that. You can't spend all this time on YouTube or this or that to learn this stuff. You need to have experience with it. Exactly why you want an experienced attorney to fight after you. So that being said, I think it's going to be a hybrid. These guys are going to go away, and then these big brokerages are going to have to offer like there's been rumors that Keller Williams is offering an online brokerage within Keller Williams as well. I'd love that. That's exactly where I want to go, because now instead of me paying 30 grand a year, it's maybe going to be 15, and then it's online, and I still have all the resources that Keller Williams has to offer. So I'm hoping.
But for you, Joey, like in your position, wouldn't you be better suited to have your own firm so that you would be your own broker?
I don't think so, because I can do everything an independent broker can do besides say that I'm an independent broker.
And have no liability.
Right. So right now, the most that I could ever pay Keller Williams, even though it's a lot of money, it's 30 grand in a given year. So if you sell a lot of real estate, that's advantageous, because that caps what I'm paying my broker. I have an in-house attorney that especially in this market, I was just in communication today with, because of a couple issues. And then I have all the resources of a full brokerage, and I can still operate as a team. Like I have a full-time assistant now. I'm bringing on another agent underneath me. So I can still have this kind of hybrid platform and have like Finro Realty Estates partnered with Keller Williams. And then again, the most that if I were to open up my own office, that would cost me more than 30 grand in rent in a year.
Right. Of course it would.
So now I kind of have this,
but I don't think you technically need an office nowadays. That's the thing, right?
True.
Yeah.
Yes. No, that is true. So so you're right. I don't have to have an office, but for instance,
my company, I might want an office just for a presentation at some point, but I wouldn't necessarily need one. Because it's all just remote. That's how my company is structured.
You are 100% right. Yeah, you are 100% right. Now, what I would say though, and I can stop giving my opinion after this, but what I would say though, when you're a brand new real estate agent, it's impossible to start out of your house. Impossible. You will never make it. I will guarantee you will never make it, because sales, especially real estate sales, is very difficult. And if you're not around, if you don't have that synergy when you're starting out, it's very difficult to make it. Now, you might sell a couple properties a year, but you're not going to be able to make it and make a living by fully at your house, because there's a lot of rejection in sales, and especially in real estate sales, there's multiple avenues of rejection. For a normal person, it's difficult to deal with that. It's extremely difficult to deal with rejections 15 times a day from so many clients, so many lenders, so many other vendors, all that stuff. And if you're not around like-minded people, it doesn't have to be every day, but if you're 100% based out of your house, you're only going to do maybe one or two, kind of things a year. That's just my perspective. And so that's why I feel like, unless, again, if people adapt more on Zoom, and maybe we're doing more, hey, let's go call our database together over Zoom every single day. But I feel like that's going to be a little bit while before kind of that more stuff happens. I don't know. Maybe I'm just too big of a skeptic on this.
Well, no, it's definitely it's a good viewpoint, because obviously you're in it, right? So you're gonna know kind of the ins and outs.
Joey's
So it's good to get that.
But what all this stuff is actually, all this stuff, what Joey just said, it just shows me that inequality is gonna continue to increase, and you better be on the right side of that.
Yes.
Survival of the fittest, man. That's what it is.
It's happening, man. Technology is getting rid of the average middleman. I think there's gonna be the exceptional middlemen will be there. They're gonna be more like curators, and the average middleman is gonna go away, and this subpar middleman shouldn't even be there in the first place.
I agree.
Even without technology. So yeah, who's out there? If you're watching, just comment if you're a subpar middleman or woman. We'd like to interview you. we'd like to interview Joey. You're gonna have a great, and Eric, you guys are gonna. I'm gonna give you guys the raw file, and you guys can splice and edit this for your channels. I want to see myself on your YouTube channel, Joey, and then Eric for sure on Instagram or wherever.
Yeah, definitely. I'll
do it.
post it there.
We got 2 more. Peloton. We all
Yeah.
love it. I own it.
Yeah.
Wife owns it in
Yeah.
her IRA. We got the bike. I don't think I'll get on it later today. I have a husky puppy. But
Oh,
We'll get
nice,
on it.
nice.
why a good stock? Again, getting rid of middleman, right? The
Yeah,
gyms.
yeah, the
Like
gym.
they're gone.
I think you know, people, why do people go to the gym, right? They might be single, they're trying to find someone, right? And they like that social just interaction. Oh, did we lose Joey?
I
He
think
left?
Joey's gone.
Okay. Maybe he'll hop.
Joey's gone. He hop on the Peloton.
Yeah, yeah. Yeah, I'll tell the Peloton. So yeah, you know, people go to gyms because I think of the social interactions. It's a place to talk to people, to meet new people. Uh, you know, that is, I think, the primary purpose. But I think more importantly, people like the privacy of their own homes. I think they like to save money, you know, especially if they're a little bit savvy with their funds. They might view, you know, going to a gym, paying for a membership as being, you know, just a waste of money. So that's why they've all, you know, during this past year, everyone invested into the home gyms. So even people that might want to go back to the gym, if they put a lot of money into their home gyms, they may not go back, even though that might be something they wanted to do.
Right.
They're
Right.
like, well, I put thousands of dollars into this home gym. Like, why would I not use it at least, right? And so I think now people have locked themselves into using a home gym. You know,
I
so
think
so
so
I
too.
don't see the market for gyms recovering as people might think it might recover. I think they'll still be around, but I think a greater portion of the market now definitely has their home gym in place,
Of
and
course.
I don't
And
see
if you
them
look
going
at
back.
all these things, like what all these things have in common, you know, every single stock we talked about, maybe the exception is the KMPH, the biotech, but
Hmm.
what it's doing is making your life more efficient, right? Like,
Hmm.
how efficient is it to drive to the gym? You know, you could spend here in Southern California more time driving than actually working out,
Hmm.
uh, at the
Exactly.
gym, right? As opposed to
Exactly.
like, okay, I got 20 minutes, I'm gonna work out, and I'll be done. I'll be done with
Hmm.
it. So I am also
Exactly.
a fan of Peloton, and then
But
the
yeah, so going into like gym membership pricing, right?
yeah.
Peloton is still that. Like, they have their subscription service. So you're still paying for a gym membership with Peloton. And that's
Right.
what makes their business model so great, because people will never, just like a gym membership, they're not going to drop that membership because then they feel like they failed, right? Even though they never go to the gym, they still want to pay for it. So, you know, it's like a mental thing. And I think the same thing is going to be happening with Peloton. They sell their products, which is one part of the revenue, but the real part of the revenue are the subscription services, and
Right.
that's where Peloton shines.
Yeah, they're giving those
Um,
bikes away almost at cost,
yeah,
basically.
I mean, every company, your company, my company, any company that is, you know, somewhat intelligent and knows what they're doing, you're going to have some sort of residual income through subscriptions, right? So
Yeah, it's the most stable. Plus, they're growing and they're adding. They're smart leadership at that company. That's everything you want to see in a category breaker. And then the last one, I was surprised to see on your
yeah,
list. I mean,
yeah.
I
Okay,
know what it
so
is. I
yeah,
personally stopped using it,
let me
but
talk a little bit
what is
about why
about
I
this?
like this. Yeah, so this kind of plays into even just why I made my company the way that I made it, right? So um, I don't really have any overhead costs in my business, right? It's very minimal, and I don't have to pay to hold product. I am the product. I am the service, right? Like like the way that my company functions is providing services to people remotely, and receiving funds in exchange for that, right? And that's kind of how Pinterest is structured as well. They don't hold any inventory. They have really no debt at all. They they are a website that has a great, like, I think it's an AI system that determines your likes, right? And what you click on is going to filter more things that are similar. And when you click on those certain items, it takes you to the products that you like. So it'll take you to the web page, and then you would purchase products through there, and then Pinterest takes money from those sales. so it's essentially affiliate links that they're using, but they have no inventory. They really have no overhead other than their employees. Any sort of system softwares that they have to pay for, of course, things like that. But they don't have the typical restraints of I think financial stress that a lot of other companies have just by holding inventory. So they are, I think, a really great company because they have nothing to lose. They there's no risk with this company. So I think in terms of their AI and how easy it is to find products that you like through Pinterest, and right now it's heavily used by women, right? But
Right.
there's a huge part of it, obviously, of growth potential because of that. Like, I think once they get more men using their system, that's another massive part of the market that they are barely tapping into. And
Possibly.
if you go
I
on
think they
Pinterest,
branded themselves too much as a female. I've stopped posting on it.
they did. But if you look on Pinterest, there's so much gun stuff, for instance, and like
Really?
woodworking stuff. Yeah, there's
Haven't been on there
so
in a
much.
while.
Yeah, so like if you look on there, like
I don't
just
even
type
know my
in,
login as I look lost.
yeah, type in like I don't know, concealment box or something. Like you'll see all these gun related American flag stuff, or just things that guys would be into. So there's a lot on here, and I think they're now trying to get more into things that would be appealing to men. So I think once they tap more into that market, I mean, this is going to become exceptionally more profitable for them. But in terms of being like a safe company, there's nothing for them to lose because they don't really have inventory or debts because of that. So
Yeah, it looks
it's
like
just
they're
it's just
investing in
positive for them.
it looks like they're investing in their employees and the AI because they
Mhm.
still don't have earnings. But they're
Right,
almost break even. 22
right,
cents a share they're
yeah,
losing.
right. And I think it's just the potential upside of them. If you believe in them, if you think they have a good
Mm,
platform, and that's how I like to invest in these companies that still have growth potential. Obviously, Tesla's a good example of that, but Shift
yeah.
as well, Shift Technologies, they are definitely undervalued right now because Carvana, I think, is selling for $40 or $60 a share or something like that, and Shift is at $8, right? But
Yeah.
Shift has better customer ratings. It has a great business model. They pay more for the vehicles, so when people want to sell their cars, they have a greater success rate with that. So in terms of competing with Carvana, I think they have a lot to actually compete with them. Oh, they're a lot more than that. Okay, so yeah, so
Carvana 47 billion.
right,
Shift is for 47 billion, 705 million. Okay,
yeah,
yeah.
yeah.
So this is way more
So it's
upside.
very, very early on in them, and I think if you invest in them now, given, let's say, 5-10 years, they should be up there with Carvana. Right.
Yeah, there's so many. I mean, I'm just obsessed right now with genomics, so I'm like way like into genetic, even Pacific Biosciences. I got to do a video on them. PACB.
Mhm.
They basically sell the tools for these genome companies, so they don't, kind of like Pinterest. They don't have any of the risk. They just sell the tools. They don't have PDUFAs or anything like that to worry about. So
Yeah, yeah. I think business models like that are very smart. And then that's cool. That's why I structured my company like that too. I think it's a smart way to do it. There's very little risk associated with it. The company is destined to be profitable with a business model like that.
that's why Viva is gonna win too, because they're selling all the tools to the all the drug
Yeah,
companies.
yeah. Viva is awesome, man. Yeah, I never thought to look up their stock, so I'm glad you showed
You
me
should
that. But
buy
yeah,
it. Actually, Kathy
yeah.
Wood has it too in her ARC.
Okay,
I
yeah.
think it's in the
No,
ARC
they're a
I.
fantastic company. I mean, I see the behind the scenes with them too, in terms of how they negotiate with sponsors, and they charge a lot of money for every client. Like,
We're trying to get them as a sponsor for Latinos in clinical research.
oh, are you? Are you?
Yeah,
Okay.
let's
Well, let me
see.
know how that one goes, because that's
Let's
pretty
see.
cool.
Let's
Yeah,
see.
like I would love to be like through my social media, like the same thing, like to be able to promote their products. So yeah, like let me know how that works out for you.
Of course, Eric. And then thank you guys for watching. Thank you, Eric, so much. We went through a lot. Send me your Robinhood affiliate link so I could put it in the Patreon for the core groups that are out there. And then I'll send you the raw file that you can splice up and put it
Perfect.
in your stories or wherever you put it these days. Everywhere. I see you everywhere. And
Yeah, I'm sending it to you right now. So just sent it over.
perfect,
So you should have
perfect.
it.
So yeah, thank you, Eric. Thank you, Joey. Joey dropped off, but that's what happens when you have a brand new baby. You
Brand new
just-
baby,
You
yeah.
gotta go. You gotta go. It's
It's
not,
priorities. Yeah.
he got heated with Zillow, and then he did a mic drop. He did a mic drop, and he had to go.
Yeah, that's right. That's
But
right.
it's okay. It's okay. So thank you guys for watching. Thank you, Eric, and I'll catch you all later. Bye bye.